Hey, what's up, everybody? Friday, September 12th. Just got back from boxing. There was like nobody there tonight at the gym, just a couple of people, so I had nobody to spar with, which is unfortunate, but what can you do? So, worked out on the heavy bag and then just took off. Maybe it was the weather, I don't know, we had some heavy rain or whatever, but nobody was there. So guys, at the end of August, I told you that we're going to be seeing this again. And what I was alluding to, or what I was talking about at the time, was the fact that I mentioned that August ended with a very large net government transfer, aka the deficit, government deficit for August. And I said that the reason for that was because the normal first of the month payments, which were supposed to go out on September 1st, they ended up going out on August 29th because September 1st was Labor Day. That was a federal holiday. So I said because of that calendar quirk, there was going to be a large, I'll use the term deficit because it's going to tie in with what I'm talking about right now. There's going to be a big deficit for August. And I said to you guys, just wait, because when the media picks up on this, they're going to be saying, oh, the deficit was much bigger and the government's spending too much. But they don't know that it was just a calendar issue. And sure enough, today, what do I see in the news online talking about how the deficit in August was much larger than expected? Now, I'm going to tell you something else. See, I always look ahead. I always look forward, and I give you guys insight into what is going to happen. I'm not the guy like everybody else who tells you, well, the number back then in August or July was this, or last quarter. I tell you what is going to happen. So in September, government's going to have a big surplus because those first of the month payments that should have went in on September 1st, they went in on August 29th. So, and this month, there's going to be a tax drain. So, not only do you not have those large transfers of September 1st, because they went in on August 29th, now you're going to have a big tax drain on September 15th. So, there's going to be a big surplus, which the media is going to, or Trump will he'll tell you about it. Maybe Besant will take credit for it. Who knows? Maybe even Elon Musk will take credit for it. Anyway, that's the kind of information you only get from me. All right? You might say, well, that's nice. That's interesting, Mike, but what does it do for me? Well, if you've been following along, I tell you how these flows impact the market. So, I mean, like, it does do stuff for you if you listen to what I'm saying and you understand and you position accordingly. Anyway, I didn't even really look at the market today. I think we had kind of a mixed day. I think NASDAQ, S&P was up. I think the Dow was down. I didn't see the close. We had a little backup in yields, no big deal. I said that was going to happen because right now, the market has fully priced in a 25 basis point cut in the Fed funds rate, which will happen next Wednesday. So now, the trading range effectively is 4% on the 10-year to 4.25. And I said because the market is also pricing in 2 more rate cuts, one in October and one in December, I said as a result of that, will probably trend down more towards the 375 level. Unless the Fed comes out, with some statement that is still very hawkish or something, or maybe they come out with a statement that is very dovish, and then we trend down to 3.5. But right now, I would say when the 10-year dips below 4%, if you're trading bonds, treasuries, if you're trading the 10-year, you could scalp that. You could trade that short term. I don't do that. I position, okay? And so I'm just letting you know, because I told you a month ago, 10-year yield's going to come down to 4%, and here we are. And now I'm telling you, we're going to hold in a holding pattern right now. And we, maybe 375 on the low side for yield, maybe 415, 420 on the high side for yield. And let's see what the Fed says on Wednesday. Tax drain on Monday, like I just mentioned. So we're in that seasonally weak period for the market, which they never tell you is due to these tax drains. You have one in September, you have one in October. October 15th, that's when you get basically the all clear to start buying again, because that's when the tax drains have ended. And then we go into November, you get a quarterly interest payment. There's another tax drain in December, which is like a kind of a mild one. And, so on and so forth. The cycle continues. Again, not a lot to talk about. We're looking at 7 trillion plus annual leading spending flows. We're looking at 1.7, 1.8 trillion net government transfers. I mean, these are astronomical numbers, folks. These are astronomical numbers. And unless we see, by the way, I looked today, net government transfers in the last week, it moved up again. Now we're still at a kind of a plateau. We haven't really broken above where we were back in May, but the year-over-year differential is still very significant. So they're pumping a lot of, swimming pool analogy, plenty of water going in the pool. The pool is at the level of the water in the pool now is kind of flatlined, at a high level, but it's not going up anymore. But what we want to be concerned with is that water level, or if that water level starts to come down, that's what we got to be concerned about. And so we have tariffs, which I think that is the thing that is keeping that water level from rising. And we're going to get rate cuts, which everybody thinks is bullish. Everybody thinks is bullish. And here's another thing that I've been seeing all over the place. Everywhere. Every hedge fund, every, very serious person, they're all saying you got to be long gold and short the dollar because the Fed is going to cut rates. And I'm saying they don't understand the impact of rate adjustments and monetary policy. Once the Fed starts cutting rates, you're going to start to remove income from the economy that is not bullish for gold, that is actually bullish for the dollar, because it actually reduces the dollar supply. And so it doesn't happen immediately. There's going to be an inflection point that we're going to hit where interest rate transfers are going to come down to the point where they're going to erase what we have received so far this year. Okay? I'll be following that in the numbers. I will know to the exact day, just like I told you back in October what was it, October 16, 2022, I said we hit the inflection point. Everything's going to go up, even though the Fed was raising interest rates. And I will know the same inflection point right now. Anyway, that's pretty much it for today. Thank you for watching. Too bad I couldn't do any sparring, but tomorrow I'm going to go fishing. And I hope you have a great weekend. Thank you for watching. Please like and subscribe. 20,000. It's still a long way off, but and don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. You're going to want to know what's going on. And my subscribers, they know. All right. Have a good one, everybody. Bye.